Hello students, welcome to the Sublease session 21. Today we are going to consider a new problem. On 1/1/2016, Premalata Limited issued a license to Reshma Limited. So can you identify the lessee and lessor here? Yes. So here Premalata Limited is a lessor who gives the license. Reshma receives the license, so become lessee. It's provided a royalty of rupees 10 per product sold. Based on the sales, we are going to calculate the royalty here. Subjected a minimum rent of rupees 75,000 per annum. The same due date, a sub license was issued by Reshma Limited. After receiving the license from Premalata Limited, so this company transfer the license, a part of the license to another third party called Chaitanya Limited. So here, Premalata Limited, lessor, Reshma Limited, lessee, and we have one more person, Chaitanya Limited, the sublessee, for a royalty of rupees 15 per product manufactured. So here is the difference that you should consider. So here, the royalty based on sales and royalty based on manufacture. So this is the major issue in this particular problem you need to consider. Of course, minimum rent 30,000 per annum. In both the cases, recoupment out of royalties in excess of minimum in the two subsequent years. It's a floating recoupment in both the cases, main lease and sublease. It's common requirement after incurring short working within the next or immediate 2 years we can make the recoupment of short working. So they have given the information. They have given 3 years information 16, 17 and 18. Sales by Reshma Limited, that means lessee. Sales by Chaitanya Limited, sublessees, and stock held at Chaitanya Limited. So based on this, we need to calculate the royalties. So prepare necessary ledger accounts in the books of lessee. So here I hope you can able to guess. Lessor is Premalata Limited, lessee is Reshma Limited, and sublessee is Chaitanya Limited. So we have to prepare the ledger accounts in the books of Reshma Limited. So of course, so we need to prepare the royalty table first. The first thing, calculation of actual royalty paid by Reshma to Premalata Limited. It is lessee to lessor. So I need to consider the sales here. So you should remember the main lease is based on the sales. So I need to consider the sales amount. So I'll consider here. For considering sales, again it should be the total sales and not the individual sales. 4,520 plus 1,220, 6,180 plus 2,790, 5,675 and 1,940. The total of sales by Reshma and Chaitanya Limited. So of course the closing stock is not at all a matter to us. The reason is the royalty based on sales. So I'll consider here total sales 4,520 plus 1,220. So the total here is 5,740. And the second one in the year 2017 it's 6,180 plus 2,790. Yes, it's 8,970. 8,970. And in the year 2018, it's 5,675 plus 1,940. It's 7,650. 7,615. So sales into royalty. The number of units sold into royalty per ton is rupees 10. So now it's 5,740 into 10. So 57,400. 8,970 into 10. 89,700. 7,615 into 10. 76,150 rupees. So then I should write the minimum rent. Minimum rent is common for all the years. It's 75,000 each. So I'll write 75,000 for all the 3 years. Then surplus or short working we need to find out. So here in the first year minimum rent is 75,000 and here 57,400. So minimum rent is higher, so we need to write in the short working column. The difference 17,600 represents short working. So then in the second year 89,700 and minimum rent is 75,000. So which represents surplus. So here we have a surplus of 14,700 and of course no shortfall. In the last year, so here 76,150 and 75,000. So again we have surplus 1,150 rupees and no short working. So after this, short working recoupment. So as far as short working recoupment, so this short working can be recouped within the next 2 years. So first year we cannot recoup any balance. The next year 17,600 carried to next year. No return off. And the final payment it's 75,000. For the second year, surplus 14,700 and short working 17,600, whichever is less. So here lesser is 14,700 recoupable and short working carried forward. So here we should check 17,600 minus 14,700. So the balance 2,900 carried to next year and no return off here. The final payment, so we have a rule minimum rent or royalty whichever is higher, less royalty recouped. So 89,700 minus 14,700, so the difference 75,000. And in the last year 2018 we have 1,150 rupees surplus and 2,900 short working. Whichever is lesser is considered here. The lesser amount is 1,150 rupees here. And carry forward balance, we cannot carry forward any balance because the 2 years will complete in 2018. And the return of balance 2,900 minus 1,150, so the remaining balance 1,750 rupees. And for the final payment again the rule applies minimum rent or short working whichever is minimum rent or royalty whichever is higher, less recoupment here. So the final payment is again 75,000. So hope you understood the preparation of the royalty table from lessee to lessor. So here you should consider only this special adjustment. There is a royalty based on the sales and the sales represents the total sales of lessee and sublessee. So after this, of course, so I'll consider the second royalty table, so which is royalty payable by sublessee to lessee here. So I should consider the output. First, the sublease is based on the number of units manufactured. Main lease was number of units sold. So it is based on the output, that means it's based on the manufacture. So as far as the manufacture, so you can observe in the problem, they have given the sales and stock of sublessee. They have given sales and stock of sublessee based on which we need to calculate the number of units manufactured by sublessee. So here I'll consider sales and closing stock of sublessee based on which we need to calculate the number of units produced. For this, of course, I hope you remember the formula number of units produced equals to sales plus closing stock minus opening stock, if any. So let me calculate this with the help of this table. So I'll just copy the sales and closing stock of sublessee. So they have given sales and closing stock. So I'll copy the same thing. They have given the sales of 3 years and closing stock of 3 years. So opening stock for the first year is nil, and here we need to find out the manufacturer. Sales 1220 plus 340 minus 0, so it is 1560. And here 2790 plus 60 minus opening stock. So here last year's closing stock will become this year opening stock. So it is 340 units. So the final result is 2510. And in the last year 1940 plus 400 minus opening stock 60. So the result is 2280. So now I'll copy the same thing, manufacture, to the second royalty table here. 1560, 2510 and 2280. So after this, rest of the things are similar. Output into royalty of rupees 15 per unit manufactured. So 1560 into 15 rupees. So it is 23,400. And here 37,650. Here 34,200. So after this, I should record the minimum rent. Minimum rent is common for all the years. It's 30,000. And I need to write surplus or short working. For the first year, minimum rent is higher, so surplus is nil, and the difference represents short working 6,600 rupees. And for the second year, royalty is higher than the minimum rent, so difference 7,650 rupees represents surplus. And in the last year, again royalty is higher, so the surplus is 4,200 and short working is nil. I need to consider recoupment, carry forward and written off. So as far as the recoupment, for the first year we cannot recoup because of short working. Entire 6,600 carry to next year and there is no written off balance. For the final payment, minimum rent or royalty, whichever is higher. So here higher amount is 30,000, less recoupment 0. So the final payment should be 30,000. For the second year, we have a surplus of 7,650 and short working 6,600. So here lesser amount is 6,600 recoup. So no amount to carry forward and no amount for written off. And for the final payment, royalty or minimum rent, whichever is higher, higher amount is 37,650 minus recoupment 6,600. So the final payment is 31,050 rupees. And for the last year, neither recoupment nor carry forward nor written off. And the final payment was 34,200. Of course, there is no fluctuation apart from taking output. As far as number of units manufactured, we have a formula that is manufacture equals to sales plus closing stock minus opening stock. So only after finding out these things, so we can apply the values to our royalty table too. So this is how we need to calculate the royalty table. I guess you remember the previous classes. In case of sublease problems, we used to prepare one more table of royalty due by lessee and sublessee. So here we have not considered that table. The main reason is the first or the main lease is based on sales and sublease is based on manufacture. In the previous classes, both the royalties are calculated based on the output. So for that reason, we have calculated there a separate table, that is royalty due by lessee and sublessee. But here, no need to prepare such table. The reason is, so here main lease is based on sales. So in case of sales, you know that we directly transfer the royalty amounts to profit and loss account instead of production account. So for that reason, no need to prepare a separate table for royalty due. So only these two tables, royalty payable by lessee and royalty payable by sublessee, is enough for our ledger account. So I'll show one ledger account and I'll leave the rest of the ledger accounts to you to prepare. So here, of course, in the role of lessee, we need to prepare three ledger account, and in the role of lessor, we need to prepare three ledger account. I'll show how to prepare royalty payable accounts, and the rest of the ledger accounts you are going to prepare. Hmm. The royalty account here, for first transaction, royalty due, and the second one for royalty transfer. So there are only two transactions to record for royalty payable account. Of course, we are not going to prepare this adjusting entry here because we are transferring the royalty amounts to profit and loss account instead of production account. So if we are going to transfer the balance of royalty to production account, then we need to prepare one more adjusting entries, that is royalty receivable account to royalty payable account. But here no need to pass this additional entry. Only two entries are enough for our royalty payable account. So let me show how to pass this royalty payable account. So here royalty payable account debits 2016 to lessor's account. So here lessor is Premalata. So Premalata's account, royalty payable account debits to Premalata's account. So I should check the first royalty table. Royalty due was 57,400. I'll record 57,400. And the credit side 2016, of course, transfer of royalty to profit and loss account, because the royalty is calculated based on the sales and not on the manufacturer. It's based on the sales, so we have to transfer the balance to profit and loss account. So for that reason, entire balance transferred to profit and loss account. No need to pass one more adjusting entry uh, from royalty receivable account. The entire balance transferred to profit and loss account. 57,400 the debit side and 57,400 on the credit side. So for the year 2017, I repeat the transaction. Royalty payable account debits to lessor's account, that is Premalata's account here. Then I'll check. Royalty due for the second year 89,700. I'll record here 89. Here. And the credit side 2017. So here I again I'll repeat the same transaction. There is no change, only two entries here. By profit and loss account, the same 89,000. There is no fluctuation. I'll write the total 89,700 on the debit and 89,700 on the credit side. And for the last year 2018, the same transaction repeats here again. Royalty payable account debits to Premalata's account. I'll check the royalty amount here. Royalty due for the third year 76,150. 76,150 rupees. 2018 by profit and loss account again 76,150. There is no changes here. Debit and credit side the total balance. Entire amount transferred to profit and loss account. So I hope you are able to identify the difference. So this is a major difference of this particular problem. So entire amount transferred to profit and loss account. The major reason is The main lease is based on the sales and not on the production. So if it is production, we need to pass one more entry for adjusting the things. But here, main lease is based on the sales, so we directly transfer the balance to profit and loss account and not to production and royalty receivable account. Again, the same thing applies even for royalty receivable account. The entire balance that we can transfer to profit and loss account instead of royalty payable account. ರಾಯಲ್ಟಿ ರಿಸೀವಬಲ್ ಅಕೌಂಟ್ ಅನ್ನು ಪ್ರಿಪೇರ್ ಮಾಡುವಾಗ ಕೂಡ ಸೇಮ್ ಅಡ್ಜಸ್ಟ್ಮೆಂಟ್ಸ್ ಅಪ್ಲೈ ಆಗ್ತದೆ. ಅಲ್ಲಿ ಕೂಡ ಡೈರೆಕ್ಟ್ ಆಗಿ ನಾವು ಪ್ರಾಫಿಟ್ ಅಂಡ್ ಲಾಸ್ ಅಕೌಂಟ್ ಅನ್ನು ಕನ್ಸಿಡರ್ ಮಾಡ್ತೇವೆ, ನಾಟ್ ರಾಯಲ್ಟಿ ಪೇಯಬಲ್ ಅಕೌಂಟ್. So hope you are able to identify the difference. So if you are having any doubts, that we can discuss in the next class. So thank you for joining. Take care, and you should remember the major adjustments of this problem. The first adjustment is mainly is based on the sales and sublease based on manufacture. In this case, no need to pass a separate adjusting entry for royalty receivable and royalty payable account. That you should keep in mind. And the second thing, they have given the sales of lessee and sublessee. So in this case, for the main lease, there is no changes. So directly we can take the total of sales of lessee and sublessee. But in case of sublease, it's based on the manufacturer. So for that reason, we should apply the formula of manufacture or production units. The manufacturer equals to sales plus closing stock minus opening stock. So I hope we'll prepare the rest of ledger accounts, short working recoverable account, lessors account, royalty receivables account, short workings, allowable or suspense account, and subleases. Thank you for watching. Take care. Learn.